Please be responsible with that power. Oh my god. All right, guys. We are recording. We have 1 hour. What's on your minds? Q&A time. Yes, Dennis, go ahead.
Hey Abby, question about AMD. I tried so after the first leg down earlier, after the market opens, I tried to catch the second leg down, but then it consolidated in between, and it consolidated quite a while. So I was wondering, like, if you were in this case, yeah, how would you manage it, or do you not touch it at all?
You have a chart you want to share, or should I open mine and we can look at it together?
Could you open yours? Sorry.
All right, no worries. All right, so here I have the 30-minute chart. What chart are you looking at? What time frame?
1 minute.
All right. So you're saying you caught the first leg down, that 1 minute ORB, is that right?
No, I didn't catch the first leg. I tried to catch a second leg after the first leg, so I wait for retest. But then it consolidated in between the first and second. It consolidated for a while. Like, how would you manage the trade here, or would you not take a trade at all?
You're talking about this consolidation here,
Yeah.
950 to 10 or so. This one here. This is see, if you're looking at it was short and then it pulls back and goes again. This is not a pullback. This just went right back to the opening price. It gave back the entire move in those first 2 minutes. It made a big short, it gave it all back. Right? This is not a pullback. A pullback would be, up to about 50% maybe, and then you could call that a pullback. Anything beyond that, it's already a reversal. So to think about a short around this area, I would struggle to think of it on a 1 minute perspective. It's very hard. I don't see much. You can see maybe a consolidation, breakout, retest, but this already made a big move. You would struggle with this. The only way I would think about it is perhaps 30-minute. I don't even see anything. On the 30-minute, look at this. Big wick down there. It's telling you buyers down there, yeah? So that's dangerous. I wouldn't go short up here thinking the buyers down. The buyers could be stepping up like they did before. Don't know. Just don't know. So I don't see an opportunity there.
Sorry, Avi.
Mm-hmm. Yeah, go ahead.
Hello. On the 5 minutes, I'm working in the last time on the 5 minutes. I found very good options. That's in shooting star inverted hammer. And then you have the confirmation with the bearish engulfing.
Mm-hmm. Yeah.
That one.
Yeah. 5 minutes makes good sense. I like that.
That's a nice setup for a short.
Yeah. This one makes sense. There you go. Thanks, JC. Yeah, one. Dennis, sorry. So you have the move started at the top here on a 5 minute chart, went to the bottom there, and then when it pulled back, I see it pulled back from here up to here. That's about 50% of that overall move so far. You can still look at this as a pullback. And what's interesting is if you're still looking at it as a pullback in here, you're seeing these continuation patterns. And the one I like to see is this one, this big reverse hammer where the tail is more than 3 times as big as the body. Unfortunately, it's a white candle, not a red one, so it's almost perfect, but still very good. It's got room to the left. The entry is a new 5 minute low. The stop is above that, and you're in this thing short. And then beyond that, a little later on, we have this bearish engulfing. We have the tiny candle. And then the top and the bottom of this candle are way out, completely engulfing the previous one with the close and the low in the same place, basically, right down there. Very bearish. So the entry would be the new low down there, and the stop is above it, and you're in that. So in this case, you do have that big old reverse ABCD pattern with the correct candles on a 5 minute chart. This would make sense. This is a good continuation setup. Yeah, cool. I haven't looked at a 5 minute chart in a while, it feels like. Well, that's a good one. Thanks, JC. It's good. Cool. All right. What else, guys? If you don't ask me questions, I'll start telling you stories.
Tell us stories.
I think I've run out of stories, to be honest. Yeah. Well, let me know what you want to talk about. My brain is not trading, so I'm available. Let's see, what do we have? Spy chart. So it did find a bounce down here. If you look at these levels, big bearish move, that level was where it pulled up to and what turned into resistance. Breakout, a bit of a bounce. And now it's bouncing off of that. So it makes sense. It's not super clean to trust this level, but it makes sense. No pattern on a 1 minute. If you're looking at higher lows, yeah, it's there, but I don't trade this stuff as a reversal, though. Anyone catch the short and now the reversal?
No.
Yeah, it's not ideal. At least the way I trade, it's not ideal. It went, but it's not ideal. I don't want to risk it. There's no way to put on a short here because this consolidation was just going the wrong direction. And here, nah, I'm just looking at the 1 minute chart. And then a reversal. What do you see here? Just higher lows. This is your first bullish candle. If you look at this bottom, and this is a second bottom, double bottom, but not a clean one. Not enough gap in between, you know? But then this is your first bullish candle, then 1057, the new highs where you enter the stop below it. To survive this pullback, and you'd be in this. But again, I don't trust all this stuff.
Scott said he did. He got it.
Scott, you got it? Oh, man, Scott knows tricks we don't know. That's the thing about it. All those mind games and card tricks and stuff.
He know where the market's going before the market open.
Yeah. Scott. Yeah.
I shorted from the 1003, but my base was the low of my level was the low of pre-market. So low of the pre-market, it was breaking, and then I just short.
Low of the pre-market. Oh yeah, that's that green line I've got as well. So
Yeah.
down in this area, right after that news, huh?
Okay. Yeah, I waited a couple of minutes, so it was the 10 o'clock. It broke, waited, and then I see that the selling volume, there was volume. I used volume, and then I just shorted.
Nice. Well, you got a hell of a move out of it.
Yes, and I had multiple scalps up to 627.
Oh, going up 627. Oh, all the way down to 627.
Yes,
Okay.
and I longed it from there as well.
Oh, you're all over this thing today. Nice. Good job, man. Good job. So yeah, make sure you get a good setup. And you know what I think? When you at least when I trade, I like to make sure that the setup is so good. It is so good that I can leave it. I can trust it to run a huge distance, so I don't have to take partials. If I take a setup that's not ideal to my eyes, or it's just like a scalp, I see momentum, there's buyers coming, there's volume coming, or whatever, and I realize the moment that those buyers move out of the way or get overwhelmed, I have to start taking partials because the sellers might take over. That's why I avoid all these situations. I just want to have a very good big picture, massive setup at a key level, and the candlestick pattern better be so good that I can put on a big position and just leave the whole position. Ideally, I take off 90% of it at the big target. So that's the way I've managed to make my trading bigger, by basically being able to hold on to the position for the entire move rather than scalping it. A lot of you guys have asked me about that recently. How do you make it bigger? And it's not really about putting on more risk per trade. You can do that, but that gets dangerous. You want to find a way to hold on, because really the biggest problem that even we see this with experienced traders as well. Everyone has the problem of getting out too early. Everyone. So I try to solve that problem. And so far it's okay. It's working. So try and think about those things. Whatever setups you're getting, see how you can really have conviction on them. What are the key elements of your setup that you want them to be absolutely perfect? And then can you trust that it'll go the distance? It'll go for quite a distance when you see it that way. Again, things to think about. These are things that I've been running through my head this year, and it's made my trading bigger. So see what you can find with that. That could be good. Because really, if you got into the SPY up here and you had a really big conviction, you could have just taken it off down here. If your setup is that, that's the setup I'm looking for. And part of that setup is the levels. Got to have that space in between them. That's part of it. So many things to think about. We have, yeah, I was really looking for that bounce down here, but it never happened. And these levels they're just so tight. Yeah, just too tight. Anyways, what else we got? Scott, you're in that reversal. Yeah. Ryan, you were crying when I left. Mark, you got 1040. You exited the SPY. Is that right? 1040 over here. We were short as well. Cool. Yeah, made a good move short. I mean, the short made sense from the open. If you guys remember, before the open today, I was saying it looks like it could be a good short, but didn't set up right. Right after the open, it got messy on the 1 minute chart. And I didn't want to touch it after that. But the setup was more for a short than anything else at the open. Sure enough, that happened in a much bigger way than I thought it would happen.
Avi, what was that fear factor that one of our aviators mentioned? It. What was that? Fear factor.
What are you talking about? Fear factor.
VIX. Talking about VIX.
VIX. Yeah. So the VIX is here. And you just Google search, it'll tell you how it's calculated. But basically, there's some calculation between the puts and calls on the SPY, and effectively, it's been used as a fear factor where essentially, if the VIX is really high, it shows you that the puts people are buying more puts and not so many calls, which means people are thinking the market's going to crash. And so I think the typical thing is 17 or something. Harsha, would you know? Is about 17 and a half or something. Once it's beyond that, then there's a lot of fear. This is more marketing hype on CNBC, I think, than anything useful. So I don't know. I've never been able to use this thing. Not effectively.
Yeah, trying to make a correlation with what I'm seeing, I can't.
Yeah, no,
Today, yes. Yeah, I can't make a correlation today, but for the previous days.
Yeah, it's not a leading indicator that I've been able to figure out as well. I mean, try and trade this thing. I don't know, how can you trade this? Look at it today. It's like a low float stock, man. Shit. I don't even know. Bet there's not enough volume on this thing anyway to trade it. I mean, to put on some real size at $17. Forget it. Again, people go on CNBC, talking heads, make a big noise, and then somebody says some comment that goes viral, and the next 50 years, people are using that word. It's a fear thing. Like, what fear? What nonsense. So careful what you listen to.
Thank you.
Gurinder, you love how people adopted the term Avi8ors. Yes, I love it too. It was great. That was Shane's idea. He got pissed off being called mentee all the time. Like, I feel like a jerk being called mentee. Don't call me mentee. Call me Avi8or. All right, sure. I like it too. It's cool. The lines aligns very nicely. Mark, yeah, I believe you can trade the VIX. I think I have traded it in the past. I must have at some point given it a shot. I don't know. Don't really know. But I don't want to really bother with these sorts of things these days. How would you gauge SPY to be that level? That's the reversal level. This is the only indication I have down here. This wick. Breakdown, retest, and then breakout, retest. That's support down here, but so are every other level. There's nothing special down here.
That's S4 on Camarilla points where the reversal is on the SPY.
Okay.
Yeah, exact point. Yeah.
Okay, so that would have been in play today for sure.
Yeah.
If you believe those. Cool. Nice.
I think also from yesterday's the first 30-minute candle, it also kind of went into that fair value gap. I'm not sure if you believe that, but the fair value gap.
What is fair value gap? I don't even know what that means.
It's a gap that's fair.
I like that. A gap that's fair. That's 80-20, man. Look, it took me more than 5 seconds to figure out. I don't want to know about it. Okay, fair value gap. That's my rule. Really keeps my head clear. More than 5 seconds, I don't want it.
Another indicator from the bounce was the ATR. The ATR was exhausted. It bounced right at the ATR.
On the SPY, the short,
Yes.
The reversal.
Yep.
Okay, nice.
Yep.
Where did you calculate ATR from? The top of the pre-market or the open or where?
I'm using Thor's in TOS. It's just automatically calculating. I don't know, but I trust that. I'm not saying I trust it, but I see several times when I'm trying to use a reversal. I try to see whether if it's at the ATR or not. You have seen me that I keep telling that it's ATR,
Yeah.
ATR.
Yeah,
It's
yeah.
Thor calculation.
Okay, so it's beyond the regular ATR indicator, which is what 14 days average. The last 14 days. That's the
I think
typical
it's
one.
14 days. The normal,
Yeah.
if I do the calculation, let me just go and do the calculation. I think it's the 14 days, but what is
Well,
the price point? I don't know.
yeah.
I can
Let's
take a
find
look.
out. Yeah, take a look. Tell me the numbers. That'll be interesting. ATR is something I've never been able to use effectively. It's always put my levels slightly off. Eventually, I just dumped it. But people use it all the time. So
Yeah, it's usually 14 days, 14 minutes, or 1 minute chart, or whatever you want. But yeah, 14 days on daily.
yeah.
I can tell you that it's definitely 14 because I'm looking at these calculations, but let's see. Spin ops. It just says 14 days. I'm not sure. It said ATR average time, wilders, and 14 days. That's it. It doesn't say anything.
Okay. So yeah.
I think it's
Okay.
in
So
TOS. There was a way that you can select the
what is
ATR,
the
and you just said it 14 days. That's it.
what is the ATR number today? Was it $3, $2? What is it?
Give me 1 second. I can do that from DOS. Because here in TOS, it doesn't say it. I can see it.
SPY is usually around $4, like pretty much every day.
Yeah.
It's 582.
Yeah.
Yeah, sorry, it is calculated. It's 582 today.
Okay, so today 582. So if the bottom is 627, right? Where did we start from? 582. Was it 633-ish? So it's basically the
226.
yeah, 32.26. About the middle of the pre-market from the high of day, really. Just about. So if let me think. There's ways to do this. One way to do it is calculate it from the previous day's close, which is really an easy way. So that's here. It makes it 631. Then it goes down $4, 627, and bounce off 627. Another way to do is the starting point should be the pre-market high or low. In this case, it's a short. So if you start with the pre-market high at 633 and you go 582, what is it, $5?
582. It's $6. Make it simple, $6.
Yeah, $6. So it ends up pretty much at 627. Makes sense. Pre-market today would have made sense. So that's the thing about ATR. I always get mixed up with where do you calculate it from, and then you got to realize it's an average. So today is not going to be that number that's on your screen. It's going to be higher or lower.
True.
Now that's too much work for me to figure out. So at that point, I throw it away. So, anyways, but there's ways to do it. I just don't know how. I don't like it. People use the opening price, and once they understand the trend or what direction the trend is going, they look at whatever criteria they need to. Then they'll say, okay, that's the final target, and from there, reversal. There's many ways. Personally, I just put levels and leave it easy enough. Just watch these levels, and it either hits the level or it doesn't. That's all there is. But today, this would have worked around 627. You had a few things down there. ATR, cam pivot. So far, that reversal, or at least the end of the down move. And
it is good. Sometimes it's good for the reversal, yes, but a lot of time I'm using it for the target as well. So if I'm shorting, for example, from the above, I don't know, 630 something, and I'm just saying I don't have a good target, I'm saying what is the ATR, and I'm just using that. So
yeah,
that was my one month when I was doing the short today. I was using as a target.
Yep, well, it makes good sense. That makes really good sense. Use it that way. Simple ways to use it. It's basically an inflection point. Whatever's happening, you expect it to stop. But let's look at the SPY like this. Let's say you found a way to take a short early on and you want to get into where do you take it off? I just look to the left and look where was support. So if I'm in a short, I identify support right here, middle of yesterday, key buyer right there. So I'd take off there. If I'm still going short, then I'm looking at the buyers right about in this range. just about there. You can see where they're stepping up, right? And then further lower, I don't see anything down in this zone. You have to zoom out a bit. I don't see any buyers. I don't see anything. You're going way back in here. I see this approximately there. I'm just looking ideally just looking at the most recent action and find where were the buyers. And so that's it. That's how I would do it. I mean, this is the simple way to do it, just eyeballing it. You don't have to do anything else. You can do that too. Different ways of doing things. And none of them are wrong, really. Absolutely none of them. We got 3 levels here, 1, 2, and 3. All would have worked fine.
Oh my God! Look at you did this through the 30 minutes, but just go to the 1 minute and look at the 1 minute. I love it the way that you do it, man. Look at those bounce, like 629 went down and then rebroke. You didn't see those. You were just putting the 30 minutes, and it's just actually working.
Yeah.
Yep.
That's all you need, man. That's all you need. It's not too complicated, really. Don't let anyone sell you any complicated indicators. Ever.
If you were doing it in 1 minute, it would be obvious. But when it was at the 30 minutes and you were doing it, it was just genius.
Yeah. Simple, right? But this was too much work for me. That's why I put Avi levels on. I just click a button and boom. This is just extra 30 seconds of work. Why would I do that? But yeah, it works. Everything works. There's no wrong way to trade. The only wrong way is the way that blows up an account. Now you're doing it wrong.
I wish I can do that one day.
You can do it. Just practice. It's easy. Just look at charts. And you know where I found levels from? From the candlestick book, from the Steve Nissen book on candlesticks, Japanese candlesticks. Very simple about levels. Look, it just flipped orientation. It was support, now it's resistance. That's the best place. Done. Or if you want to find support levels, look, where was support? Just how I showed you. Where was resistance most recently? Just go in the recent past. It's this concept is so easy. And you just do it every day. After a little bit, you'll get it. It just becomes instinctive. It's not too complicated. What I cannot do is do this on moving averages. As in now I use the moving average as support or resistance like a level. I just like, what? It keeps moving. That's a problem. I can't trust it. You got to hit a stationary target. It's much easier than hitting a moving target. So much, much better.
I tried to use the moving average. I couldn't. One day it was working and I was just proud of having that moving average. The next day it was against me. I said, what the heck? What should I do? I removed it and I said, okay, it's not working. I can't read it. Maybe someone like Ratchet, for example, Ratchet is using the moving average very well. He is using it. He can read it.
Yep.
Each person have different brain and way of calculation.
Yep. Everyone's got their own way of seeing it.
Yeah.
And yeah, if it's not working for you, just go the other way. There's no magic strategy. There's no magic setup. There's no magic in the market, really. You just got to find a way. There's no strategy that'll work for you. If you go and copy something out there or copy me, it's not going to work for you. You got to just, what are you able to perceive? And then put that on your charts and just get good at that. Just dial it in. Keep dialing it in all the time.
Mm-hmm.
It's that simple.
You are the magic.
Me? Oh, don't even start. I'm just having a good time hanging out with you guys. It's too much fun. What are you looking at? What is this mark you put on my screen?
What is it?
I don't know where Mark comes up with this stuff from. And stop it, Mark.
Oh my God, Mark!
What is this?
He probably took a log at 253.
Oh gosh! Where'd you find all this junk? Oh man. Cool. You guys all good with that affiliate stuff? You know where to go, what to do? If you want to use it, it's there. Anyone got questions on it? Let me know.
Sorry, I missed that. Is the link?
Yeah, so just the link here. I'll put it here in this chat for everyone here as well. It's the same old link I've always used. There you go. So in that link in there, you click on Avi's day trading mentorship. it'll take you to where you can purchase the mentorship. You guys are already in here. But near the bottom there, you have an option to become an affiliate. So you click on that and set up your affiliate link. And anyone makes a purchase through your link to come into this mentorship, you'll get 25% of that. And that's it. Nothing else
Okay,
to
that
it.
means that we should create the link and then pass it on.
Yes. It'll give you a specific, unique identifier to know that it's your link.
Okay, so that
It's
is
a
that is
technical
important things to know.
Yeah. So get in there and it'll walk you through the steps, whatever it is. It's fairly straightforward. And pretty simple. If you ever want to refer anyone to here, then you get paid. That's about it. Makes it easy. A lot of you guys are going out there and telling people to join in this mentorship, so this is a bit of a way of paying it back.
Something just happened to UNH.
UNH. What is that? United Healthcare.
Yeah.
What did you do, man? Nasser, you bought something?
No, I haven't. I wish I had. But
It's beaten down though.
I was just looking for a short position, actually, if there's basically no news on it. But it seems there are some news. So it cannot be unknown news.
Yeah. There's something going on. Yeah, some news. Just be careful with this.
Another CEO being killed. It was their CEO that was killed, I think, by someone, the UNH.
Really?
Yeah, it wasn't their CEO. It was like their sister company, whatever. Like one of their branch CEO, not the whole company CEO.
The patient was not happy and went and killed the CEO.
What is going on, man?
Wild. New York. Like.
Gosh, this world is insane. Oh, man. Healthcare, spy. What else was good today? We had a few different things. Clo, yeah, it didn't go anywhere. Got into a mess. Am I missing something here in the chat, or is this from earlier?
Was there any news for this drop on the spot in NVIDIA, AMD, anything? I'm just curious. I was not trading in news, but just because there was a sell-off after 10 o'clock. Was there anything? Any tweets? Anything?
UNH, anyone?
Not the UNH.
Was there...
On the, I mean, SPY, NVIDIA, AMD. When I'm just looking at all of these, there was a sell-off after 10.
10 o'clock, there was some manufacturing news, but that was it.
But usually those news are have a 1 minute, 2 minute effect, not like this half an hour or 1 hour sell-off. I'm just curious to see what was that half an hour, 1 hour sell-off.
No, don't know what's going on. It's still August. We're still in summer. Truly, this thing's going nowhere. 16 daily, weekly chart. I've always been curious about this. Let me explore a few things here. All right. So if we're going with major picture levels, we have there, the breakout, a smaller consolidation right there. What I'm really looking for is 2 wicks in the same place. Then you have something to work with. Just using the weekly chart, and I'm not seeing it here. Otherwise, you have the close and a wick. So over here, I see support. Very firm. Only after this day closes, you see it, and then it's not useful. Or this week, these are weekly candles. This, yeah, also where it flips. So this is interesting. This yesterday, this week's low. See that? Firm resistance, breakout, retest. 626.23. You just pick that level on the weekly chart. That's the key level. Go to the 1 minute. There it is. It's down there. If it bounces off of there, that's a big one. So this is weekly chart levels. You can put these levels on and leave it for a month. And if on one day in the month it comes there, you trade it. Different ways of doing things. Yeah, much, much slower. So you have this obvious consolidation. Wait, today it didn't go there? It should have, right? 626? What am I confused about? I'm doing something weird here. Something's not right. What am I seeing wrong? Oh, so it's not today. This is the week. It's not the,
Yeah.
it's the week. Right. Okay. It's not today. Right. It bounced off that earlier in the week. So weekly charts make sense.
Because even if you go on the daily, you can see on August 1st, it tried to go down into that zone, but it got bought up pretty quick.
Yes.
Yeah.
Yeah. Those levels, you picked them off the weekly chart, and on the daily chart, you're getting very obvious clean bounces. Well, we actually picked them off, but didn't get it here. You get that breakout yesterday would have been the day to just go rip this thing up. And you got this bounce, and this is the day would be long. Well, there's ways to do things.
Avi, look at that. What is that week? Oh, the next one, the long week.
Yes.
Yeah. So I know that you're not. Do you ever use these dailies like this when it's like that long? The week is like that long, or no? You don't use that.
I don't look at the daily chart, but I mean it's a good candlestick. Everything's in place. It's moved up, and in the consolidation, it's put in the wick. But you want the wick to come out of the consolidation, below this level right here, below this low. Once it come down in here, then you can say it's got room to the left. Then it really is aggressive after that. So I would like to see that. If I see this on a 30-minute, yeah, I take it all the time.
No, I'm just using it on a daily. For example, it was that 16th of July that we've seen that, and then on the 17th of July, we have a long bias, and then use the 30 minutes. I said that yesterday it was that daily candle that we have.
Oh yeah.
I'm just gonna have a long bias. Use the 30 minutes to execute.
Yeah,
but
yeah.
had not had a short bias because I said that this was super strong as the day before.
Yeah,
That's
makes sense. Makes sense. What you would look for here is once it breaks through that previous day's high. So you
yes,
right there. That would be your entry. Early in the day is your entry, and then you go up for that big high over there.
Yes, that's what I'm saying.
Yeah, definitely not a problem trading that way. You can do that. That's why previous days levels are actually very useful in day trading most of the time. But I don't know. I find more conviction on the Avi levels, especially with targets. Like really having a firm idea about target, that eases my mind, makes it easy. Otherwise, I don't know. Should I pick yesterday's high or 2 days ago high for the target? Should it be this high over here on the 10th of July, or should I go with this one here, 15th of July? And it's becoming subjective. I like it to be black and white, not subjective. So that's just my thinking. Makes life easier for me. But again, nothing wrong with these. If you like to trade them, you can trade them. You can do the same thing here. See this bullish candle, and then on this day it opens, it's a gap up, and you want it to break long beyond the resistance that was right there, which happened to be the opening price. So it dropped at the open, it reclaims opening price as your fallen angel set up straight up to the top. No big deal. And then it bounces there too. Today you could short that. Look at that. Maybe short that one today, huh? 631.50. How would that look like? There you go. That's your short. Not too bad. There's many ways to do it. Many ways. I like to make it non-subjective. That's the key. That's the key. I don't like to go in and hunt for levels. I did enough of that. Really, the more black and white, the easier it is. And so far this summer, Avi levels have just been boring. The most boring thing on the planet. Can't even use it.
Hey, one question here. So yesterday there was news saying that some banks think that the market is going to retract 10-15% because it's at an all-time high. But what do you think? Is it exaggerating, or do you think that's likely to happen?
I think it's a lump of crap, really. You're going to trade the SPY based on that news?
No, I'm just curious.
Yeah, I never pay attention to that. There's a lot of garbage out there. A lot of garbage out there. They got to say things to please their shareholders. They got to do all kinds of stuff to please their banking, financing. They got internal corruption. They all this shit going on. You're not going to make your trading decisions based on that. Look
just
at the
to sell the news and sell the news and then make trade out of it. But it's good for them, not for us.
Yeah, there you go. And if you have that understanding that they're manipulating everything with their news, then you take the other side of that trade. I mean, their strategy is based on that. I just don't know them. I never studied it. I think that's too complicated. I'd rather just do this. This is much easier, right? 30-minute charts and wait for it. Not too complicated.
Avi, can I ask a question about yesterday's NVIDIA?
Yeah, what you got?
Question I have is, I was looking at the chart. In the pre-market, I can see a gap. It's a nice gap. And then when the market opened, it dropped down on basically. I'm looking at 1 minute at the opening range breakout. It dropped down to 174 something, and then it went back up, claiming the open price around 175.5. Perhaps it's really crossed above the VWAP. So actually, it gives a confidence that actually it can move up. So if I enter long at 175.50 ish, my stop would be 174.50. Is that correct? Or no?
Yeah, that's the only place to put the stop is below the low of day at that point.
Yeah.
But that's why it's not a good entry, because you cannot take a tight stop on this.
Yeah.
I'd just leave this one alone.
So that would be $1 whole of my stop.
Yeah.
What would be my target? Because when I look at the previous day high is 176.50, and naturally I would be inclined to put my target at 176. So basically, my RVR is 1-to-1.
1-to-1 is not going to make you money. You're going to end up losing money. Don't do that. You're going to hurt yourself. The only way I can think of trading this is, since it's a gap up, think of the fallen angel. You first have the drop and then the reclaim of the opening price.
Yeah.
The opening high. So I would measure out the opening range, which is approximately that much. Your target's up there. And if you can catch that entry over here as it breaks that previous high, as in this candle is going to be jumpy and choppy and probably high volume and all that as it's breaking out. You want to get an entry right above the level as it's breaking out, stop right below the entry candle, and there's your target. Very difficult to catch these, because half the time you stop out. Even just on this candle, the way it ended up, you may have stopped out because it may have gone up and down and then go. So this one is tough. I would like to see a tight consolidation before the breakout. Then the breakout's more trustworthy. And even then, I'd say don't enter the breakout. I'd say wait for the retest. Enter that with a tight stop. Now you might get 4 or 5 R to the target. So this one, even though it went, man, it's not something I would trust. Something I'd be very careful with.
I see. So basically, you wouldn't enter on the first break, because actually your stop would be actually quite wide.
Yeah, it would be way too wide. And you don't want a wide stop. You want a tight stop. That's the whole point of day trading.
Yeah, fair.
Get good RVR.
And then when it actually retests, would you wait for it to come back to the open, or because at the moment it didn't touch the open, it actually jumped back out?
You wanted to retest the breakout area. The breakout area is right here, this first 1 minute high. So if it breaks out and bounces off that level again, just about in this zone, that's when you have that retest.
Oh, it didn't reach that zone. Would you still do the retest?
Yeah, it didn't. No, forget about it. Leave it alone. Let it go.
Okay, so it's not it's a no trade.
Yeah, I wouldn't trade this. The only thing I would think about maybe is here. I already made a bit of a move. We see this hammer here. This is a very bullish indication. Near perfect hammer with room to the left. The new 1 minute high would be the entry, but you put your stop below it, you're still not getting good RVR into that next level up. Still very difficult.
Yeah.
It's almost there. This one, just the way I trade, there's nothing to trade here. It's just went.
Okay, fine. Fair enough. Thanks.
Yeah, sure. Yeah, this would have gone to that target, but man, it's not enough money to be made in this. Cool. Where's NVIDIA now? Sitting down there. Cool. What's the SPY doing? Still stuck down there, huh? What a mess. Not much going on. Really not much going on here. Today is the day I came closest to taking a trade beyond all the days in the last month or so. And nothing there. It's just too tight. Potential 3-bar play going down, but this has a wick down here, so makes it difficult. Yeah, right there. And there's no room, just no room.
Avi,
What else, guys? What else?
How is that?
Go ahead.
That you just mentioned that it has a wick down for the 3-bar play that will be invalidated, or when you look at 3-bar play, it shouldn't have that wick.
Yeah, ideally it's purely bearish, straight up and straight down from the top. Ideally, it should have a wick on the upside. That makes sense too. But the close and the low should be in the same place at the level. Then a consolidation candle. Then the new low is the entry. But not here. This has that buyer sitting down there. There's a buyer. That low of day 627 has a buyer. So I won't trust it.
Okay, thank you.
Yep. Cool. All right. What else is on your minds, guys?
Just looking at it, Avi, tell me what you think of Meta. I mean, I know it's kind of, I don't know.
It's okay. I don't hold a grudge. What do we have here? Oh, gosh. Well, it's been a week. Broke through this pre-market support. This is very firm support. Actually, this is an interesting level. Look at that. Intraday yesterday, that was resistance. Pretty good consolidation for the breakout. Bounce off. And then it failed. Turned what was resistant, turned support, and then turned back into resistance right here. If you're able to read all this before the breakdown, you might catch an entry right there. And if you're going to find targets, you'd look for where was the most recent support. I'd say it's here. That'd be a target. And down here before the big move began. You have here, and then you have down in this area, these 2 wicks. These are all target zones. The entry would be up here, 774. Let's see what that looked like earlier. Bounce off, failed. Oh, there you go. Consolidation. You have an opportunity to enter here. Targets, re-entry, targets. And another target further down. But difficult price action. Nothing here looks ideal to me. You have this head and shoulders up here again. I've seen twice today. Yeah, something to think about. That could be a reverse ABCD. If you're looking at a moving average, it's rejecting the 9 EMA or something. That could be your entry. So, tricky one, though. Again, Meta's always tricky. It doesn't really play nice. I'm even seeing a few gaps in the 1-minute chart. Just the worst. Worst thing ever. Anyways, yeah, Meta. What else, guys? What else y'all want to look at? Then Meta again. Consolidation, breakout. Is this a retest to continue down? Possibly. Oh, man. You guys see what I see on a 5-minute chart on the SPY? Anyone? Come on, I've traded this plenty of times.
I see two options, Avi. Either a double bottom or a flag continuation, bearish flag.
Okay. Yeah, you and Dean both got the double bottom. And I think it's more double bottom than anything bearish because firstly, it's come from a big move down. It's at a level that you believe in. You have the first bottom here, the second bottom's higher, and it just closed a bullish candle. The new high would be the entry right now from a 5-minute perspective. And stop below it. And then you just hold on to it. That's if you're trading a 5-minute chart. Be careful with that. You have to be really wide about that. But this looks like a pretty well completed double bottom to my eyes. And if it was going to be bearish, well, this, when it pushed weak, especially this red candle here, it would have at least got to the day's low. It's telling you the buyers are stepping up. And then again here, twice in a row on a 5-minute chart. So this is kind of the thing I would look at. And there's room to the left on this double bottom 5-minute chart. I mean, it hasn't been here in a while, right? Not since yesterday. So something interesting there. On a 1-minute, just a choppy mess. 15-minute, choppy mess. 30-minute, nothing. So pick your time frame, stick to it. Otherwise, you can always manipulate charts to see what you want to see. And that's when it gets dangerous, especially when you're having a rough day. That's when you end up hurting your account. So pick your time frame, pick your indicators, make them black and white, and don't screw with them. Just let it be. And trading doesn't require much thought. It really shouldn't. That's how I like it. I think we have something on Amazon here. Bullish, and then came back and bounced off of the pre-market area. You can see that yesterday's area. That was resistance. That was resistance here. Now it's turned into support. If you'd picked this level before the open, let's see how that would have worked out. Maybe you catch the 1-minute ORB. That's very difficult, but here's where you'd really catch it. You see these higher lows, you have some conviction, you're in this thing. Didn't look at that earlier, did we? If you're looking at a 1-minute chart, you're looking, if you're getting long here, you're thinking, let's go 30. 30 makes more sense. You're thinking, where are potential targets? So resistance, you have it up here, anything lower. Going into yesterday's, 2 days ago action. What do you see right here? See that? Wick, wick, wick. This was support, turn resistance. Oh, and even here, it's pretty obvious resistance. That would be a target. So if you're long down here an hour ago, you would have hit that target. Let's see. Yeah, right up there. There you go. Down there, and that's your target. Not too complicated, huh? We didn't pay enough attention to Amazon this morning. But again, just picking levels, 30-minute charts, not too difficult. And that's what I like to do. When I do levels, I pick them on a bigger time frame and then trade them on a smaller time frame. The Avi stuff is 30-minute chart levels. And then I take the entries on the 1-minute. If the setup is also done 30-minute, of course. So that makes things quite powerful. And simple. Cool. Last 10 minutes here, guys. What do y'all want to talk about?
I guess the SPY is setting up for double bottom, isn't it? Almost. Almost.
But setting up for a double bottom? Really? Where?
No, I mean in 5 minutes. If you look at 5 minutes.
Yeah. Oh, well, it already happened when we were talking about it a few minutes ago.
Oh, sorry.
I told you.
By making your coffee. Sorry.
Hey, imagine a coffee. Well, you missed your entry. The entry was like 2 minutes ago, right? There when we were talking about it. The stop right below, and you know it's kind of sitting there and take a while and go, but whatever.
Is it too late now?
Yeah. Anyways, if you're trading the 5-minute chart, it's tricky. Oh, there it is. There's your entry right now. Now it's back to your entry. Enter right now.
Yeah.
Stop below it, but this is a really wide stop. You're trading a 5-minute chart. Okay, it's just too big. It's just too big. Look at on the 1-minute chart, you know, this is where I go with fractal patterns. I pick a big picture and a small picture. On a 30-minute, no setup, and you go to the 1. I mean, what is this nonsense?
Yeah.
It's all garbage. The 5 is this in-between time frame that I can't figure out, you know, so I don't trust it. I tried it for a while. Look for levels and the setup and the entry all on the 5 minute. And it wasn't consistent for me, not the way I could do things. So I jumped it. Let's go to the 30 minute.
If it is for right, so if you're looking at 30 minutes, then you would have to wait for at least 2-3 hours from the day to form at least a few 30-minute candles.
Or you can show up at the open and look at all of the action that happened overnight, and you might have something right at the open. And if you have nothing, wait for a 30-minute candle to close, then you might have something. If not, then wait for another 30-minute candle to close, and you might have something. That's how I do my days.
Yeah.
Only make my decisions at the end of a 30-minute candle. And then after that, wait until you get a setup on a 1 minute, which might mean 10 minutes, wait 15 minutes, I don't know, whatever. And then you get something. It's nice and slow. You don't have to go chasing the market around, right?
Well, the 5 minute failed actually, almost.
The what? 5 minute does
The
what?
5 minute double bottom almost failed. Actually, I'm glad
It failed. Did it fail? Yeah. Almost. Your stop would be down here below this big white
I
bullish.
didn't enter anyway.
Yeah. See, the buyers are here. You know where they are. They were here on this red candle, and then they were here again. They reinforced it. These are tweezer bottoms. They're very powerful. And they pushed this candle all the way up. So you put your stop below that. If those buyers get overwhelmed, that's when you don't want to be in this long anymore. Ideally, they just keep making higher lows. But let's see. So once you put your stop, leave it there. There's a good reason for it to be there.
Is it going to be the stop? Is it going to be at the base of the 2 weeks or the body of 1045?
Just give it a bit of room below the 2 wicks. I'd put it somewhere here, probably just above 627, somewhere down there. Again, this is a 5 minute chart. It's a bit unreasonable to trade this stuff. I don't know.
Avi, can you not look at that as a short as well? When you see that the price came back down, retested the Fibonacci level, and potentially wants to go lower to the low of day?
I don't see a short. As long as these lows keep getting higher, there is no short. And this wick over here, this is not convincing enough. There's no room to the left on this. What you want is a tight consolidation, and then put in one of those wicks that pops out of the consolidation. Then you have something. Let's see if we can find one of those. We should be able to find something on that. Oh, like this one. See this wick over here? You have a consolidation. Then you have this wick that pops way out of the consolidation and got room to the left. That's when you have the short, and you stop above it. Actually, that's would have been perfect today. If it wasn't a big downtrend from before. That's a good continuation trade. If you had this price action down here, I'd say, yeah, short. But not the way it is right now. No way. It's more a double bottom than it is anything else. Even right now, this is a higher low. The buyers are still stepping up the price so far. You do have the sellers as well, putting it down, but you don't have a clean pattern for the sellers.
Yeah, the weeks are actually symmetric.
What you have is a double bottom, though. That's the key. If you had that flat consolidation without these bullish candles in it, then you had that reverse hammer. That would have been an entry for a short. That would have happened maybe 30 minutes ago. But it's not happening here. There's no way I would think about a short. The only two possibilities are long or it's just stuck there for a while. So far, the longer it stays here, the longer it looks like it's stuck here. But the long is where I would have some conviction on a 5 minute chart.
This conviction gives you the wicks from the hammer and the red candle before the hammer?
The conviction for the long is on the double bottom. You see the bottom here, then a nice arch, a good space, as in a good push up, then a higher bottom with very good wicks down there, telling you about the buyers. And once this candle closed bullish, this is, to my eyes, this is a bullish candle where the close and the high are basically in the same place. Big wick on the bottom side. It's basically a hammer. The new high would have been an entry basically in the middle of this red candle somewhere. Let's stop below the second bottom, and I just wait for the target.
And the
whole thing happened when there's room to the left on the 5 minute chart. That's how I look at these double bottoms. But again, I look at this pattern on a 30 minute and I'll take it. 5 minute, not. Targets would be further up.
And the target would be about like 629, 630.
Well, the way I trade, I just go level to level. So that next level would be the target, and then the next
Right.
level, and the next level.
Yeah, 629, correct.
Yeah. I mean, there's no RVR in this one to go for that target, so can't work with it. Yeah.
Avi, what do you think of the shooting star like at this location on a SPY at this level? Is it like something which you will consider for anything, or like is it like okay, it doesn't matter like too much at this location?
This one at 11:45, the red one.
Yeah.
Yeah, it's irrelevant. It's just in the middle of chop of basically inside of a big bullish setup. You're getting something a little, well, something quite bearish, but in the middle of chop, where the bulls are still very much, I'd say, more in charge than the bears. Right? I'd say these lows are getting higher. If there was a big wick and it went outside of this chop, and you got room to the left on the wick, and then it slammed itself down, now you got something. This didn't even get out of the consolidation. This is not even a consolidation, really. This is really a good press upwards. On a 1 minute chart, people would take this and say they caught a reversal. How many people have done that? On a 5 minute chart, you're beginning to see a reversal, maybe, or it's going to stay there all day. I don't know. But so far, I would not think of this as a short. No way. There's no way for that. I mean, it could go down, of course, but I wouldn't put risk on it. If I was going to trade this, I would have put it on maybe 15 minutes ago and just the stop would be down there and let it mess around. Ideally, it goes after that. But again, 5 minute chart trading is just such a waste of time. There's better ways to make money. All right, last few minutes here, guys. Let me know what's on your minds. For those of you who missed the announcements, this week I'll be here. I'm not sure about Friday if I'll be here or not, but I'm traveling on Saturday. We're doing the meetup on Sunday in Amsterdam. And I'll be back to trading on the 25th of August. So that's 2 weeks. And the other announcement is we have an affiliate program now for our little group. So go ahead and click and set up your link, and there you get paid. Nice and easy. Man, I got stuck there, huh? Look at this options chart. Can't trade that. What do you got here, Mark? 1 minute. Looks like it flipped into a descending wedge at 11:30. What on the SPY? 11:30. What do you have? 11:30 here. I don't see much of a wedge. I don't see anything here. It's just a mess. This whole thing's a disaster. It's not a thing here. RJ, you want to talk about long-term investing in books? Okay, we can do that. Not today. We're ending this session now. We can get into it. We'll be back tomorrow and Thursday and Friday. I don't know about Friday if I'll be here or not, but yeah, we'll get into it. No big deal. Just remind me again when we come online again tomorrow. We'll make a time for it. We have an investing channel. We actually don't talk about it enough. I think there's a lot going on there. I mean, that's when I really started making big money, was in the investing world, and only more recently in day trading. So yeah, there's lots of money to be made. Market is a freaking gold mine. Yep. All right. And any of you guys have any questions about the affiliate thing, just send me a private message. I'll help you get set up. If you're lost with that stuff, let me know. I'm sort of figuring this stuff out myself. So, but not too complicated. I've done it before. Nice and easy. What do we got, Brian? Oh, Brian, welcome back. When you say room to the left, are you referring to the context and more candles? Yeah, look, if you look at these candles right here, right? There's no room to the left. All of them, they're just overlapping each other. But look at it up here. This big head and shoulders pattern, look at the peak of it. There's room to the left. It hasn't been up here in a while, right? Room to the left basically means the price has gone to a place where it hasn't gone to in a long time, and therefore doesn't like to be there, generally speaking. So that's a place to look for a setup, either a continuation or a reversal. And ideally, you have a level there, a level you trust, bearish move or whatever you trust. That's room to the left. Look at this thing. It came down. When it came down here, there's room to the left. And sure enough, it goes. It gives you a good pattern, then go. That's what you want. So room to the left. You just want to make sure it hasn't been there in a while, right? And therefore, it's likely to not stay there. It's out of its comfort zone, just like a human being. Out of the comfort zone, you want to not be there anymore. You either keep going or you turn back. That's basically it. Cool. All right, guys, that's noon. I will end the recording here.